all you devils. How we doing today? Sam here with you. It's Friday, November 2nd. And as has been our habit and our pattern, is if it's a Friday, we're going to look at Bitcoin. Now, there's been some development here, so there's enough here to maybe we can look at a few things that might be worth noticing in terms of where we could be going next. So first, this is a particularly good example to use of some of the GAN and ranging techniques that we've been focusing on lately due to what's happening in the market. So I've demonstrated this before. It's a range expansion technique, but if we just kind of, before I get to it, if we just look at Bitcoin here, it's pretty clearly we've been in, I guess you could say that's a tight range here. And now we've broken through that range, come back to retest it. Well, when you have that, I mean, look at the Vegas wave. Literally, those moving averages are on top of one another, right? Just absolutely no traction. So a clearly defined range, which now has been broken, and now we're back to retesting here. So just to demonstrate, this is a particularly good market structure to use this. So in our, well, I call it the wolf range. That's the guy who taught it to me. So here's what we're trying to do. Since we have this range and now we've broken the range, we're looking for any kind of relationship between the two. So all I'm doing, since I want to project down, I'm going to take my high here, right here. You can see we damn near double top here. Get it right on there. And then come down to the first pivot low that I get right here. Okay, so I'm just taking this range. Now I'm doubling it. Here's 100%. So I have the 50. Here's the range. I have the 50 of the range. Here's the minus 50. Here's the doubling of that range, which would be a minus 100, minus 150, 200. So interestingly, we take that range, we double it, and Bitcoin has come down and tagged it damn near. It looks like it's a tick or two shy of it, but that certainly is of note here. So we have a clearly established range. We double the range. Now look at the reaction that we've had off of that doubling. So when I see that, it tells me that potentially now this is an ideal environment for a GAN square. I've already got the squaring of the range of the market. So I'm just going to come over here and grab my GAN square. Now, before I do it here, I'm going to lock the scale just so you kind of get the idea. Now, if I'm looking for the down GAN fan, right, the down sloping, I should say, as I come down here, the first thing I'm going to look for is not the first one, it's the second one, right? You see that? Okay, so I'm looking, since I'm projecting down, and here's my range, here's the first squaring of the market that I'm after, right? So remember GAN talked about squaring a price and time. So there's the square, and that's why our 45-degree angle is so important, cuts through right through the corner of that square. You get the idea. All right, so once I have that on there now, I can take off the wolf range because now I have the range established. Now, if you like having that there, that can be helpful just to identify that range. So just so you know, it's not essential. So we put this right back on top of it so you can see the range. Now, so I'm sorry, here, let me get this. We started it here. All right, there we go. So there's our range. Here's the tag. Now, look as we have come out of this, how we're right in the arc here. So we've hit our negative 100, a doubling of the range, and we've had this reaction. So here we're now the first resistance we're going to deal with. I guess I want this here. So this is not unsurprising that we've come back to the range. Now, if we're going to continue to go, so first thing we have to do is get through this down sloping angle here as we go through. So we've come up, hit some resistance here. We're still in this arc. We need to get through this and challenge the top of the range. Well, first, let's get through the 50. So our potential track here is if we're going to get up and challenge the upper side of the range, it would not be uncommon for a visit back inside the range. Maybe we come back to our launching point before we get off and get some traction going outside of the range. And then we would essentially do the same thing. So we would take that same range here that's so clearly established, and now we're going to project up. All right, you see that? So here's the doubling of that range from here. Here's our 100. Right? So we'd be running into some of these upper resistance levels up here, working from that corner. So it's a Right. Now, this can be confusing. If you do it yourself, it's a little easier to see and understand what's relating to what. So as you look here on the video, understand a lot of lines, and people like to say, hey, you put enough lines up there, you're going to hit something somewhere. Well, granted, that's why I try and take you through what's behind this. So if I take that off and you get the idea here, here's our range. So this is the range everything is keying off of, this range that we established. Right, so that all through that time period, now we've come down, we've doubled the range, tagged it, now we're back into the range. So if we can get out of this range, we're going to have to get up. So next resistance here, well, clearly we'll have some resistance at the 50. So if we can get beyond this range, then what I think is more likely is we get beyond this range. Here's our negative 100, come back and test the range, and then start heading up towards something like the negative 200. Now we can put that in a fib context as well. Once we have something that's moving that would be conducive to that kind of analysis. Right now, this is just range trading. So the wolf range is absolutely perfect for this. Now, of course, we can do this from both directions. Right now, we're respecting the longer term trend. So if I pull that off, all right, we have, so here's the downside. So respecting the longer term trend, the first look at it would be with the Gann angle sloping down. All right, so with that established, now that we're back in the range, now you could do a couple things here. So working from this low here, since we've got this pivot here where something happened, right? We have some technical confluence, so we get that. Then again, what's defining this range, what I want here, is that if I take this pivot here and I come down, here was the defining pivot of that range. Right? So this well, let's look at it this way. So let me get this. So this part of the range, this size of the range, right, is what is influencing it and tied to the second part of the range, right? You see that? So this is where I'm connecting those two trend lines. Here's where we attach the trend lines. Now we've broken through. So thus the anticipation would be, if we're going to get up here, if we're going to stall or get up, maybe challenge the minus 150, here's our point of control. If we come back down, this would not be unsurprising at all to test the other side of that trend line, test that support. This would be essentially 50% from this low. We're going up, there would be 50%. Now we push up to challenge the upper side of that range. Right? Do you see all we're doing there? So it's just another way to approach the market as we sit here looking at this going, oh, what's the Elliott count? Well, can you get one on there? Yeah, probably. You could dig something out, but is it going to be helpful? Is it meaningful? If you can get something there that's helping you, please forward it to me with details as to how that's helping you. There is no count here that's of any use to us. So when the market doesn't offer it, you work with what you've got. Right now, we've got a ranging market. Well, right, so let's approach it with a range-based analysis and see if we can see anything that's significant. This is not insignificant. Right? So the fact that we tag this at a doubling of the range, at the very least, it gives us a technical pivot to work with for something like a trend line. Right? This was not insignificant. As we took the range, doubled it, we came right back to the lower edge of the range. Again, a technical pivot. Right? So the fact that we're on the other side of this lends some juice to the bulls, but don't be surprised if we come back and retest this. Now we could, of course, just do the same thing here. We could grab this low, and now that we have a new high, we're looking for the 50, so we're going to be pretty close than our negative 100. So you get the idea. It's relatively straightforward, but it's very effective, and you don't have to use it just in markets that are going sideways. I've demonstrated a few times how it can be effective on a market that's moving or coming out of congestion. So it's a simple technique, but it can be very effective. Now, just before we wrap here, since we've looked at the downside and the bias to the short side with Gann angles that are sloping down, let's look at the upside, right? So if we come back here, so I've got the same thing here. This is the 60-minute on coin, exact same chart. All right, so actually I'm gonna pull out to a 2-hour here. We can see this a little bit better. Can that do it? Let me reset here. There we go. Maybe I can get it here. So this was a range that really the market there we go. Let's scrunch it up a little bit. All right, so here we go. All right, same idea, same chart here, slightly different range. So here was the range. So on the last chart, we were looking at this right here. Right? We defined that right here. Let me get this back here. So this was the range. This was the triangle we just drew relative to this range right here. Well, stepping back a little bit, here's our dominant low. So can we get that same ranging technique? Now look here, as I've shown this multiple times, where this is not me drawing the range, that's the market defining that range, right? We can see it very clearly how it's defined that range. Yeah, we've had a few pokes through it, but this has been the range. So can we range the market heading higher? Same technique, right? All we've got is a range and we're splitting everything in half. All right, so if we take, so I would do it two ways here. So the first thing I would check is the dominant swing to this first pivot that defines this range here, was revisited here. So if I do that and I grab my low here and I go up to my high, right on it, right? Do I have the range? Right? This is not coincidental, right? That's a doubling of the range. Do you see all we've done here? Here's the range. Market defines the range. Here's a doubling, just like the one we just looked at, where the 100% on the downside was significant, where we had the same thing here. So if we pull it back, that big pivot back here was a doubling of the range. We come back here, same idea. We get the range, we double the range, we get that reaction. So there are some that think there's an algorithm tied to this. There may well be. So again, we don't have random things happening in the market. Pivots are, if you can't find it, you got to keep looking. There rarely do we see significant pivots that are not technical. Well, I'd tell you just about any market. But here, looking, that's not insignificant. So could we do the same thing? So let me get this stuff off of here. All right, so here's halving of that range. Now we could, if you note here, look. So if we just kind of eyeball that, cutting that in half, and kind of eyeball this, cutting this one in half, kind of looks like that same idea is in play here. Same thing here. If I just grab these and I just kind of eyeball it and cut them in half, looks like I might have something is there. So that's what we call that, the wolf range with the quarters in it. So as I pull these out here, so the exact same range. Now if I take that and I just add the 0.25s, which all I'm doing is cutting everything in half. So I'm going to go down here. I'm going to put on the different template. This has the 0.25. Now look at that range. Right, swing low. Here's what defines the range. Right, look how we have tagged right here, right down here, here, back here, here. You see how this just consistently becomes the support, prior support, now the resistance, support. Yeah, we got a wick through it. Now that's the prior support, support again, up to resistance. Right. So again, how many times? Right. These are not approximate to the tick, close. Right. I know we broke that. So I mean, fairly solid evidence here that we have got the range of the market. Well, let me rephrase that. By identifying the range the market has established, we can use these pivots to our advantage. So if we're thinking about our Gann range here, right? So Gann's idea was we'd bounce through these pivots harmonically. We'd tag them, go up, back, tag, exactly what you're seeing right there. So if we do the same thing, now we looked at with the bearish side, can we get a bullish case here? So if I take that same Gann square, now I'm looking up. So I'm taking the range here. I'm going up to the first pivot here. Right, so do you see when I put it right on top of the range, that disappears. Right, so now I could take those off. So now you see I have the here's the squaring of price and time. Right, you see that right there? So 45 comes right through the middle of that, right through the corner of it. All right, so if we take sorry. Let's get this back. I got to reset here. That's why you got to lock the scale. Okay, sorry guys, I'll do it one more time. So let me get my Gann square on here so you can see it again. So that's my square. That's pardon me, that's the ranging. So I'm going to get my Gann square on top of that. So if I get it back on here. Okay, here's my corner. Here's my first interaction. So there's my squaring. So let's lock this. I don't have that issue again. So now I can take this off, right? So I have it, right? Do you see? So here, do you see how this, well, I guess we can take this off too. So as I look over here, right, we're getting you know, we're barely hovering. I mean, I could add one more here, but we're barely hovering here. So this is going to go. So you might have to expand the box here. So do you know here what, if I grab it, since we had the doubling up here, so if I take it right there, that can be the new range. All right, you see, so now if we, by expanding the range, by going to where it doubled, here's my new box, right? Here's the new squaring of price and time. Here's the 100 that we hit. Here's the corner going, right? So you see how that works. So as we hit those levels, we can expand the range. Now we're down here hovering on the corner of this, so we may need to add some more, but if we look here, we've got lots of room over on the other side. So if we're gonna get above this, where are we gonna hit some resistance? Well, we know that's here from the market. If we can get through that, right? So here's the doubling up here, you note that? Right, so this would be a logical place for us to run into some resistance. So you have the ability to project up as well as down. And if you wanted to come back to where we were, you could do it this way as well. So with this established here, now if we take this range, we can do the same thing from that pivot. So let me reset this all. All right, so see. So just giving you different approaches with which you could do it. So we know we had exactly the doubling of this range, right? So you remember, if you'll, right? So we had the exact doubling of that range here. So now we could do, you could take that Gann box and do the same thing from this pivot because we know it was technical. Well, let's see, let's do it this way. All right, so we have this, so let's get that range. So from, well, let me get rid of that box. So here's my significant low, here's the range, right? So we saw it, here's the low end of the range, we came back and tagged it. So if I go right from this pivot to, this is the potentially now the new range. I'm gonna take that off and go back to traditional wolf. All right, so all I'm looking at is the 50s. All right, if I need to add the others, I can. So here's my range, here's the doubling of my range. So I could take that same Gann box, work from this pivot low, here's my first range, right? So you see it, there's the squaring of price and time right here, that first square, right? Go right through the corner. So where are we going? Where's the light? Well, so we have, so if you look here, if we come back down, the 45 should be some support, potential support. It's going to be halfway. Here's the 50. Right, so if we could split this line in this section in half. We don't have to. Here's the 50. If we're going to come back up, there's a logical target right there. So do you see that potential path? Back to the 50, then up to the doubling to catch the corner, to catch the 45-degree channel. Right, so you'd have kind of a nice confluence here. So here's that downsloping trend line that was defined by this pivot, by the first interaction. Here's our square. Right, here's the 50 from that. So if we come back down, tag that 50. Now the 45 may be the support. Maybe we'll get it this way. You just don't know. But you do have this time element in Gann's work that will let you identify, well, if we're going to come down, tag this, this would be a revisit of the trend line, which is not uncommon. So we come down to the 50, tag it, and then up for the doubling of that range. All right, so just some different ways to take what the market is offering, which obviously we're in a range. And if you can't get an Elliott count, you know, you can still design a roadmap here and build a roadmap of potential pivot points and probability zones where you're anticipating a technical reaction. Right, so for those of you that, for whatever reason, you have issue with Elliott Wave, or the subjectivity of it, or whatever your issue is with it, here's another way to approach the market. Very simple, but it all starts with the very simple wolf range. What's the range of the market? All right, can we get it? If we can identify it, then we can put the Gann square on it. We can start identifying a roadmap. So there it sits. Right, we come back down, tag the lower part of the trend line. Potential support, you could do it this way. You could say, oh, from the length from my high. Well, now I've got a little confluence zone. All right, this area, as we come back, potentially coming back to revisit this trend line, very common to test that trend line before we push up to some of those upper targets. All right, so I'll give you some new ways to approach the market or deal with a ranging market. And I'm going to try and get one or two other examples for you today to show you this in a market that's trending, because it's not just for a sideways market. All right, guys. Okay, with that, I'll wrap here. We've got, there's some good things over on the Twitter page where we're just doing some promos, and we're working on a new setup so you can come in and trial the membership for a week. We're working on that. Should be announced probably early of next week. All right, guys. Okay, we'll see you later.